And it's the 23rd of January, 2023. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning Live on Channels Television. I'm Laddie Williams. It's great to have you join us. And it's 8 days to the end of the month and the expiration of old notes. That's the January 31st deadline for you to exchange your old notes for the new ones. And we did get some people share their experiences earlier. They said they weren't able to withdraw over 40,000 naira on bank ATMs. They couldn't get some of those new notes we're all expecting. And obviously, remember, you can always share your experience with us on at our email, just businessmorning@channelstv.com. Send us your experiences and how you're able, if you're able to transact with the new note to get some of those new notes. But obviously, we're still counting down to that deadline. That's January the 31st. But first off, let's look at what's happening with oil markets. Now, we see oil prices drifted lower today, thinned by the Lunar New Year holiday in East Asia, but held on to most of last week's gains on the prospect of an economic recovery in top oil importer China this year. Brent crude futures was down about 46 cents to $87.17 a barrel, while U.S. WTI crude futures, that fell about 36 cents, was down about 0.4% to $81.28 a barrel. Last week, Brent rose 2.8%, while the U.S. benchmark logged a 1.8% gain. And they say that the optimism around China's reopening will likely drive oil prices higher. So obviously, we'll be keeping tabs on prices this week. And now back here, the number of mobile subscriptions in Nigeria rose to 222 million in 2022, despite the implementation of the federal government's National Identification Number Subscriber Identity Module policy. The start of the policy in April, over 72.77 million active telecom subscriptions were barred from making calls, but the industry has since shaking off the effect of this and grew by 13.89% in 2022. According to new data from the Nigerian Communications Commission, the total number of subscriptions grew from 195.13 million as of December 2021 to 222.23 million as of December 2022. This growth signifies a complete shake-off of the decline that plagued the telecoms industry in 2021, when the total number of mobile subscriptions declined by 4.42%. And on Tuesday, January 25th, the Senate is expected to make a decision on President Muhammadu Buhari's request that the upper chamber restructure the 23.7 trillion naira ways and means advances given to the federal government by the Central Bank of Nigeria. The upper chamber had suspended the consideration of the request to restructure the overdraft after some lawmakers described it as illegal and demanded information of how the federal government spent the money. This report, our National Assembly correspondent Linda Higwe examines the implications of the 23.7 trillion naira ways and means advances on Nigeria's debt stock. Take a listen.
The year 2022.
On December 21st, 2022, the President of the Senate, Senator Ahmad Lawan, read a letter from President Muhammadu Buhari requesting that the upper chamber approve the restructuring of 23.7 trillion naira ways and means advances given to the federal government by the Central Bank of Nigeria.
The ways and means advances by the Central Bank of Nigeria, CBN, to the federal government has been a funding option available to the FGN, to the federal government, to cater for short-term or emergency finance to fund delayed government expected cash receipts or fiscal deficits.
But on the day set aside to debate the president's request for restructuring the ways and means advances, some lawmakers were visibly opposed to approving the overdraft.
I don't know where the law comes from, where we have to spend money or restructure expenditures through ways and means.
Citing relevant laws from the Constitution and the CBN Act, a lawmaker says the request is not in line with the Constitution.
It will be wrong for the Senate to approve this thing without having details how these monies were spent.
With the tensions in the chamber and the disapproval by some legislators, the Senate suspended President Buhari's request to restructure the 23.7 trillion naira ways and means advances, but recommended that 1 trillion naira from the ways and means advances be used to fund the 819 billion naira supplementary budget already passed by the Senate. The upper chamber also set up a committee to liaise with the CBN and Ministry of Finance to get details of what the monies were spent on. But some financial analysts say the 23.7 trillion naira Ways and Means advances are an example of fiscal indiscipline by the federal government.
At the Central Bank of Nigeria, why did you get the approval to give beyond 5% of the previous year's budget? I think those that manage the finances of Nigeria as at best mismanaged it.
Now the law has been violated and the money has accumulated to such a humongous extent that we are now caught between the devil and the deep blue sea.
Analysts are also alarmed that the move would hike Nigeria's official debt load by more than half, propelling the country's debt stock to 77 trillion naira by May 2023, according to a forecast by the Debt Management Office.
Are we even going to ever be able to pay these monies back? Because it's huge. If you are paying as much as 4 trillion naira, what is the expected revenue in 2023 budget? Expected revenue is lower than what you're expecting as borrowing, and you already have debt service.
They also fault the National Assembly for allowing the federal government disregard the CBN Act, restricting outstanding loans to 5% of the previous year's budget and mandating that the funding be repaid within the same financial year.
The legislature that is giving powers of control and oversight over public finances, where were they? Have they not been seeing the budget implementation reports? Did this 23 trillion accumulate in a day? It accumulated over a period of 10 years. But the accentuation of the accumulation happened in the Buhari presidency. They failed in the discharge of their duties. So any grandstanding now is not acceptable.
Nigeria has no choice but to repay this debt. Financial analysts, however, anticipate that the Senate, in its report on Tuesday, will approve the most legal manner of repaying this debt in a way that will cause the least hardship to Nigerians. Linda Akibi, Channels Television News.
And now to our first conversation. The Monetary Policy Committee meeting, two-day meeting, kicks off today. And obviously, we'll get that decision by tomorrow. At this meeting, the committee remains faced with either maintaining its hiking cycle or keeping policy parameters unchanged. Let's talk now to Professor Joseph Nana, Chief Economist, Development Bank of Nigeria, joining us from Abuja studio. Great to have you on the program, and Happy New Year.
Great to be here, Ladi. Happy New Year to you, too.
Fantastic. And obviously, we did speak, at the last meeting, that was last year, and, we did get that hike, wasn't, as aggressive as the previous hikes. But now we're kicking off a new cycle, for the year. The first one starting today. Looking back at 2022, with all the rate hikes we saw, did we get any wins for the Nigerian economy?
Okay, that's a fantastic question, Ladi. So let me start by this. So we know last year we're in the post-COVID recovery. We also went through the Russia-Ukraine war, which obviously drove up price of energy cost as well as food inflation. What I do know about that is that Russia and Ukraine combined supply a lot of the world's wheat. And if you look at Nigeria's food inflation numbers, they continue to inch upwards, albeit that we know that food makes up a great proportion of the headline inflation figures here in the country because we import a lot of these inputs. As a result, food prices have gone up, reducing as well as inflation, so which reduces the purchasing power of households and, quite frankly, MSMEs. As a result of that now, we've also seen rising government debt. We've also seen a slower growth in terms of quarter-on-quarter GDP. To that end, for me, I would say this is the end of easy money in terms of quantitative easing globally. And as it relates to Nigeria, for the wins, we closed 2022 with probably around a 3%, 3.1% GDP growth. Notwithstanding, I feel as though the growth was not inclusive enough because we know there are so many households and MSMEs still struggling, still hoping for the better to happen in the country. And because that's not forthcoming, I would say there isn't really any bright spots for households and MSMEs for now, simply because the growth in which we witnessed and we observed in the country wasn't inclusive. I'll pause there.
All right, and obviously we saw that trend. We could, comfortably call 2022 the year of rate hikes, and obviously into 2023 we might even see, more going forward. But obviously it was a global phenomenon, and every central banker was fighting inflation, in 2022. But looking at Nigeria's situation, did we have to raise rates in 2022? Was there any other way aside raising rates?
Well, from the monetarist perspective, the central bank's job is to control prices, manage price stability within the economy. So as a result, they only have a handful of tools within their toolkit to achieve this. And doing so means they have to hike up rates. That's the MPR, that's the monetary policy rate. Once you do that, you're essentially signaling to the market that, hey, look, it's going to be more expensive to borrow money. And we're going to sacrifice growth to achieve pulling out the excess liquidity within the economy. That being said, what happens in the global economy happens in Nigeria because we're in a globalized world now. We cannot operate in isolation. So what happens there, as long as manufacturers, agri importers, and so on are buying inputs from other countries, they're going to import those inflation into the country and pass it on to households and consumers like you and I. So the central bank is challenged because they only have a handful of tools within the toolkit, and they have to hike rates in order to manage or mitigate the risk of inflation running out of control. If you recall, the last report MBS published as of December showcased that the inflation figures headline has dropped a bit. I expected it to rise, but it dropped. But it doesn't mean it's dropping. It means inflation is still going up, but at a slower pace. To that end, because this is a pre-MPC analysis, I think the endogenous, what we can control within the model, which is the security issues and what have you, and the redesign of the Naira and so on, will play a role in whether or not they will hike rates a bit. But if you look at what happened in the US, the Federal Reserve, the Bank of England, Euro area, all the central bank governors in those jurisdictions have already lowered, or should I say, tapered down a bit, meaning that the levels of hikes will be reduced just to ensure we're still signaling to the market that, let's just say, we're trying to get our hands around the inflationary pressures, because purchasing power is sacrosanct. You cannot sacrifice that. At the end of the day, households will struggle, MSMEs will struggle. So as a result, you have to make sure you're keeping an eye on the exogenous outside of the economy and the endogenous, what's happening locally here, to ensure that we have a good grapple of what's going on in the economy. So my guess is that the monetary authorities will probably hike rates, but at a very lowered pace, meaning a 25 basis points thereabout.
All right. Well, obviously, we know other central bankers are, doing the same thing at this point, with the U.S. Fed, going lower. And obviously, we did also get, a lower hike, for Nigeria in the last MPC meeting. But looking at our situation here, should we also be tapering, with our rate hikes?
Absolutely. I think tapering or holding steady is the way to go, just because there's been so many things the central bank has done so far. I observed in the news there's a lot of sensitization going out along the lines of the redesign of the Naira, making sure there's a swap program whereby you have the rural dwellers and the market people essentially go into the banks, exchange their old notes for the new notes. Quite frankly, this is a welcomed intervention, but the truth of the matter is this. I sincerely believe, because the NBS produced a report last year dimensioning the multi-dimensional poverty index This report is quite instructive for the country because we've seen, in terms of access to basic infrastructure, we've seen monetary, education, and health. All of this translated to more than 60% of the population is in one shape or form in poverty. As a result, from the monetary perspective now, when it comes to the paper notes, what I see here is if the hard deadline holds true, which central bank has said is going to stay on the 31st, that's fine. But we're going to send more people into poverty because of that. I sincerely believe that because I don't believe everybody in the country is fully aware and has the resources to go into the banking hall to change their notes to the new currency. I'm one person here in Abuja. I actually went to several ATMs to look for the new notes over the weekend. I can tell you that I got some old notes as well as new notes. So as a result of that, for me, I believe the central bank has done considerable work in actually bringing out new notes at all ATMs, but it's now left for the individuals, the population, to now take these notes, or the old notes, and bring it to the banking halls and so on. And if you know most Nigerians like I do, we are always keen on waiting to the last second in order to achieve our objective. So I expect a rush to the banking halls on the last day. That's my suspicion.
All right, but looking at this, redesign policy, is there a better way, or do you think there's an easier way to go about this? Could we just let both run together? What's wrong with letting both of them run together for a longer time? Do we really need a deadline?
Okay, that's a fair question. In the U.S., we have, in the U.S. there, you have currencies printed in circulation from 2006, $100 notes in 2006, still in circulation, while the new notes, the new version of the $100 bill is still running side by side with it. We also know King Charles of England and Wales has also said that, not him, but the Bank of England has said his feature, his image will show on the pound sterling, which will run side by side with the Queen's image. So if we know in these two jurisdictions we can achieve the same objective, I'm sure it could be done in Nigeria as well. The challenge is the central bank has said the objectives, the core objectives, is to control the money supply as well as to support the security agencies to trace and mitigate illicit financial flows. That latter aspect of my statement here essentially tells me all we need to know about the core objective. So if that's the core objective, then the central bank is not willing to risk that intervention by allowing the old notes and the new notes run side by side. Notwithstanding, my fear is more on households and MSMEs, because ultimately, if an extension is not given, my fear is the old notes will cease to become legal tender and they end up holding a piece of paper which is meaningless to them, and they can't go into the banking halls to exchange it for real, or should I say, the new legal tender.
And Prof, looking at all of this, and obviously it's the election starts next month. How do you see this impacting the Nigerian economy as a whole in 2023?
Well, during the election process, I suspect there will be a lot of electioneering happening, so a lot of monies will be in circulation. That is why this redesign is coming full force right now. That's my suspicion. I know a lot of Nigerians are aware of this, but I think, sincerely speaking, that the monetary authorities will have to keep a keen eye on the level of money supply with the old as well as the new currencies, and see which businesses are still accepting these old currencies and taking it to the banking hall, because the buck stops at the respective banking halls. But in the end, we know in every election cycle, there's a lot of excess liquidity in circulation, which will ultimately drive, heat up inflation. So that's why I suspect the monetary policy authorities will see this and say, we're probably going to signal we're still going to increase rates just a little bit, and ultimately monitor to see if inflation levels are still going to continue its downward trend. But this is just a dot in the data series. You see, the December figure of the inflation coming down is just a dot in the data series. So we have to look for more reports from the NBS to see if in fact this is a new trend going downwards. But I suspect it's a blip, and inflation has not ended in Nigeria just yet, simply because the level of insecurity is still high. Farmers will have a difficult time going to during their harvest, and see the yields will be lowered. And if the yields are lowered, then food price inflation will continue to run away from us, and purchasing power becomes problematic.
All right, Prof, before I let you go, a quick one now. Look, if, for instance, we're already seeing, that there's talks that inflation is peaking, in other global economies, but is there a possibility that if we see inflation peak there and, starts to head downward, is there a risk that Nigeria's inflation could still be rising?
Absolutely.
Absolutely.
Like I said, we look at exogenous and endogenous variables. The exogenous variables, we can't really control them, which is the war in Ukraine, which has a lot to do with the price of energy as well as food prices. That's wheat. If you look at what the NBS said, cereals and so on went up. As a result of that, we can see where the problem comes from. If our strategic reserves is not deployed to help mitigate the risk of runaway prices on food, then ultimately we'll still face food inflation. But more importantly, I would say, look at core inflation. Remove the basket of foods and focus on just energy costs. Diesel, fuel costs are up. There's currently right now some level of, I guess I would say, fuel scarcity occurring. And this is a function of the fuel marketers and the suppliers and so on at loggerheads with pricing. So as far as I'm concerned, all these things we see are within our control. If we can get a grapple around it, then perhaps we can manage the risk of inflation running away from us. But if we cannot control the endogenous variables, which I've pointed out already, then we'll probably see more issues in the future throughout the year. But my suspicion is inflation has not ended yet. We'll still see an uptick in inflation, but for the year, it's going to average probably around 16, 17% thereabout. That's my best guess, 17%. But notwithstanding, we haven't seen the end of inflation. Inflation will go up, but eventually it will come down.
All right, Prof. We'll keep watching all the global central bankers as they continue to battle inflation in 2023. Thank you so much, Professor Joseph Nana, Chief Economist, Development Bank of Nigeria. It was great having your perspective today. Thank you so much.
Thanks for having me, Ladi. Appreciate you.
All right. So after the break, we'll take a look at the global tech market as layoffs bite. Keep getting those announcements about layoffs from the global tech companies. That's our next conversation. Do stay with us. Welcome back. Still watching Business Morning live from Channels HQ. To our next conversation now. The year 2022 has definitely made it to the history books, and its impacts on the technology world will not be easily forgotten, with announcements of layoffs from major tech companies. Let's discuss the expected impact on Nigerian tech workforce. Now, join us is Enoika, founder, Business Analysis School. Join us via Zoom. Great to have you on the show.
Hello, good morning. Great to be here. Thank you. Good
morning. So I know it's been announcements of layoffs in 2022, and we've seen job cuts, already in that, sector. And the big one recently, Google, cut about 12,000 jobs. How big is this?
Ladi, it's really big. I mean, we started seeing it with Meta cutting down 10,000 staff, Amazon 18,000, Microsoft 10,000. And now we have Google with 12,000, which is actually making us to see that big tech is trying to cut down on their expenses. We've also seen this in Nigeria. Quidax, a crypto exchange, cut down 25% of their workforce. We saw Kuda Bank cut down 5% of their workforce in 2022. So it's definitely affecting Nigeria, but not as much as the other continents. I must say that a lot of these workers that are affected are mostly people who are working in the tech startups in Nigeria are facing this. They join these companies looking to build solutions, build their tech experience, be part of something big, but unfortunately, they're being laid off and, of course, looking at other opportunities outside of the tech sector right now.
And obviously, this seems to be a trend that's growing, even into 2023. So, as a tech, worker there, how do you make yourself layoff proof?
That's a very good question. I definitely would say that for a lot of workers, they always say they didn't see it coming. But seriously, if you are working within an organization or in an industry, you would know that, we're not profitable. Layoffs come from the company looking at their financials and saying, what can we do to cut costs? So if you work within the tech industry, you should be keeping your ears to the ground, read the financial statements, join the town halls, listen in, and know where the direction for the company is moving. If you're working on certain projects or solutions that you can tell are no longer priority to the business, then you need to change your department or start looking for work. You also want to start to improve yourself, invest in personal development, get training, modern technologies, learn about the new skills, improve yourself so that you would always be employable. Keep your options open. Start talking to other companies who are interested in your skills if you know that the company's vision is changing. Lastly, I definitely would say look into freelancing and consulting opportunities too as well. These are ways that you can grow your income, and of course, make sure you're having those savings on the side as well.
And there's a lot of chatter about artificial intelligence, AI, and most of these companies seem to be towing that route. So I'm wondering, how do you compete, with AI and artificial intelligence that's trying to take your job? How do you compete with that?
Well, I wouldn't say we would compete with AI. AI definitely is like the buzz, ChatGPT. Everyone is, buzzing about how smart and intelligent this tool is, but I don't think it would take away from our jobs. What we need to do right now as professionals is to learn how to incorporate AI into our daily activities, right? Show your company that with the use of AI, you are more productive. You can take on more work because you can incorporate AI into your company, right? So that's what we should be looking at. And that's why a lot of companies right now, like Google and Microsoft, investing into AI, they're moving away. Meta as well, they're moving away from other solutions and looking at AI. So you want to plug yourself into that within your organization as well and say, I'm interested in seeing how I can leverage AI to support the business growth. So let's, embrace it. Let's not run away from it or be scared. Let's embrace it and see how we can improve productivity and, of course, improve our profitability as well.
And obviously, Chat GPT getting all the attention. Now, I have tried it, try to ask it some question, and it's quite intelligent and very interesting, with the way it answers those, questions that you don't expect it to actually be able to answer. But when do you think these layoffs, do you think they're going to end sometime this year, all these announcements of layoffs, or do we still expect it, going forward?
Well, I still see layoffs happening in 2023, right? 2020 was the boom for the tech sector. While other sectors were, struggling, the tech sector saw companies, doubling in valuation in such period of time. We saw, capital fund coming in to tech startups. And now with, the Russia-Ukraine war, the effects of the pandemic in terms of the recession, the interest rates that are being increased, like you were talking about right now with the professor, all of these things are happening and there's less funds available. And because there are less funds available and people are spending less, these companies are losing profits. And what's going to happen, they're actually going to have to reduce their costs. So we'll still see some layoffs. And that's why workers right now need to future-proof their careers against layoffs.
Future-proofing sounds quite difficult, but what about employees, working remotely, here in Nigeria for some of these tech companies abroad?
So if you still have your job right now, I think that you are in a good place. What I see is that these companies are trying to cut costs, right? And because of that, they would definitely prefer to hire workers in Nigeria or anywhere else in Africa because they're saving. They're paying them in their local currencies, right? I mean, even with our company, we have staff in Nigeria. So these companies would actually focus on hiring in Africa or even in Nigeria, especially for tech roles that you can do remotely. For example, programming, coding, development, product management, data analysis. These are, careers that you can do from anywhere in the world. So I definitely would say for workers who are working remotely, this is the time to show yourself and show that you can contribute so much more and that you're indispensable. Also, for freelancers and contractors, this is the time to pitch this company and tell them that, look, I can provide these services for you, from my local, my local area, from my country, without having to, even relocate, and I can provide these services for you. So I think it's a great opportunity for Africa right now. And even all of these tech companies that are laying off and trying to cut costs, I encourage them to come to Africa, come to Nigeria, and hire our tech workers, because we're going to help you to save more money and, of course, still meet your business goals.
All right. Well, I do like, the remote workers, because that's practically we're exporting, because we're getting all of that foreign currency in, and we do need more, coming in at this time. Thank you so much, Enoika, founder, Business Analysis School. It's great having your perspective.
Thank you, Ladi.
Thank you. All right, so let's head on to the markets now. Let's take a look at how your money performed last week and what we can expect for this week. We have Anita Edit now coming in with the details for the Nigerian equities market and the fixed income market. How's it going? Good morning.
Well, Ladi, we're ready for another week, and of course, it is the week of MPC, the much awaited MPC first meeting for
and you know what intrigues me about the MPC raising rates or not going as hard. It doesn't seem to impact the equities market like it does in the US.
Especially when you take a look at the last MPC meeting, which the MPC had raised the interest rate to about some 16%. Now the market defied that monetary policy decision. As a matter of fact, if you take a look, the market was still in the upside, particularly in the month of December, defying all of that.
And no one is able to explain this.
Exactly. But of course, the fixed income markets, well, it might have some impact at the fixed income market, but I will be giving you that detail. And then, of course, we'll be having our analysts to talk about that as the interview progresses. So now, this is the FX market performance for last week. It was on the upside, but particularly for the FX spot and the forwards market. But when you take a look at the futures was down by 10.50% at 8.22. $41.808 million, in contrast to what it had within the previous week. But the total turnover of transactions there was up by 27.22%, and that's thanks to the FX spot market as well as the forwards market. They contributed mostly to that 27.22%, which you saw for that market. Now for the Naira, it was unchanged at 461 Naira 29 kobo, which is what it posted or closed as at January the 13th, which is about 2 weeks ago. So now for that market, well, moving over to the fixed income market, we saw the fixed income market for the bonds market, it remained bearish. Average yield there, it expanded by 64 basis points to about 13.4%. Last week, you saw the MBS release the December 2022 inflation data, which showed that inflation dropped from 21.47% to 21.34%. And at the same time, we also saw the FAC inflow nearly $1 trillion, which was far higher than what we had in November for coming into the financial system. So now moving over to the Treasury bills market. The Treasury bills market, it was mixed, but albeit with a bullish tilt. Average yield there across all instruments, it paired by 2 basis points to about 3.4%. And this is attributed to increased demand for OMO bills amid sell-off for the Treasury bills segment. Now, what we will be expecting this week, first, we will be having as we speak now, the Central Bank's Monetary Policy Committee are holding their first meeting for 2023. And of course, we have it that they're expecting that there's going to be a slight hike in interest rate for the monetary policy rate of the central bank. So now we will be talking to Senator Audu to give us more insight into what to expect this week. Okay, now, Senator, good morning, Senator. Can you give me more details about what to expect this week? First, we're going to have the primary market auction, the impact of this inflation numbers? Is the CBN going to take any decisive measure as far as rates are concerned? And what impact is this expected to have for the fixed income market instruments this week?
Good morning, Aniete. Thanks for having me. So as you already explained, there's the MPC meeting currently holding. Today and tomorrow, we expect the committee's decision to be released tomorrow. Analysts are currently split on the direction in which the MPC might go. The majority of analysts are tilting towards the CBN maintaining the MPR at 16.5% levels. That's largely attributable to the fact that the inflation figures slowed month on month from 21.47% to 21.34% for the month of December. That expectation would directly impact particularly the bond market, and we will see some impact on the treasury bills market. But the question was, the focus of the question was on treasury bills market, so I'll speak first on that. So there's the NTB auction this week. The DMO is expected to offer exactly what has matured, about 220 billion is maturing on Thursday. The auction is to hold on Wednesday. We expect that at that auction, rates should decline slightly, largely as a result of the fact that the secondary market is currently trading much lower than where it closed at the previous auction. So at the last NTB auction, we saw the stop rate for the 1 year close at 7.3%. But in the secondary market, we've seen those bills trade at 5% levels. So we might see market participants go into that auction bidding at 6%, 7% levels. So we expect a bit of a decline in the rates on the stop rate, particularly on the 1 year. For the home maturities, there's an home maturity for home bills tomorrow, about 40 billion. We don't expect that to significantly affect market sentiment. For the key drivers of market sentiment this week, we expect their coupon payments today and tomorrow. The total for that is about 202 billion. We also expect FAC payments to come into the system. So as you rightly mentioned earlier in the program, you mentioned that the bond market has been experiencing a bearish sentiment. We expect that sentiment, we expect a little bit of a reversal in that, given this liquidity figures that we expect to come into the system this week. So we've seen the markets, the bond market, be largely bearish as a result of the fact of the calendar that was released earlier, where we have about 4 bonds on offer, the 28s, the 32s, the 37s, and the 2049s. So we expect a bit of a moderation in those bearish sentiments this week.
Thank you so much, Senator. And of course, our attention is always across all the markets to see how they turn to the size of investors. So that was Senator Audu, fixed income dealer at Access Bank. Now take a look at the board there. For the markets, the third trading week of January is still in the green by moderate, almost almost 0.5%, but just still far away from the 0.25% increase. Now, what you have is that the market was driven by investors' interest, particularly for Airtel Africa, which countered the loss from Dangote Cement, as well as some other key bellwethers across the market. Look at the board there. It's a mixed picture, but the Reds have it, particularly the banking counter, which was down by 2.60%. But the insurance counter had the highest gain, 1.70%, which it closed for the week, while the oil and gas was also up by 0.35%. But at the same time, what you saw, the impact of Dangote Cement sell pressure affected that counter, and it retracted by more than 1% as at the close of Friday's trading session, but week on week. Now take a look at the activity chart. In terms of activity, the activity chart is everything all in the red, all of it, no thanks to investors maybe making a pullback from, in contrast to what you had in the previous week. So far, last week, what we saw was that it was a rather weakened sentiment in contrast to what you had in the previous week for that market. But we will be turning out to see how the market turns out for investors, particularly when you look at the MPC's first race decision meeting. You don't know what side is going to tilt to. Right. Maybe there's a higher rate hike, or maybe they're going to retain the interest rate at the same level, which it were.
Obviously, we're all looking forward to that tomorrow. But I know your crystal ball, works pretty fine. What are you expecting? Expecting a bombshell tomorrow by any chance?
Well, not really a bombshell, laddie. I think not just guessing. I'm sure the market is going to close in the green. It's going to defy
regardless of how high.
Yes, regardless
rates
how high, because
are raised.
actually investors are looking, well, at the same time, the macroeconomic environment is not too favorable, but when you look at inflation and you look at the election, and at the same time, the central bank's monetary policy committee, you have to put your money where your mouth is.
So much for investors to look out for.
Stocks will do it.
Exactly.
Stocks will do it better.
Thank you so much, Anita. Thank you for those details. That was Anita there giving us the details for the Nigeria equities market and the fixed income market. Well, right now, we're heading to Tokyo, Japan. We see the Nigeria-Japan Business Forum kicks off today till the 27th of January. And we have our very own Juliana Olayinka on ground there. And obviously, we're going to be getting details about that later on and see how we see what it's going to happen there and what to expect, from that big business forum coming up. But we'll take a break now. When we come back, we head to that. Do stay with us. This is Business Morning. Right now, let's head on there. I did tell you about the Nigeria-Japan Business Forum kicking off today right there in Tokyo. So I have joined us from there participant. That's Adelana Olamilekon, CEO, Zenith Carex, right there in Tokyo. Great to have you. Good morning.
Good morning.
So tell us, why are you at the event and what are your expectations over there?
Okay, thank you very much. Just like you said, my name is Dr. Adila Olamilekon, MD, CEO, Zenith Carex International. Yeah, we are participating in this program by way of bringing our organization to the global stage. We are a one-stop logistic service provider in Nigeria with over 75 branches nationwide and over 400 staff, working in the organization. So we see this opportunity as a way of having exposure, international exposure when it comes to business networking, business expansion globally, and many other opportunities that we'll be able to annex here. We're also looking at technology to improve our business back home.
All right, Dr. Adelana, looking at, I know you're in the logistics business there. Do you see some investment opportunity, coming from Japan into Nigeria, looking at talks that we had over there in Tokyo?
Okay. Surely there's going to be a business opportunity coming to the country. And as a logistics service provider, we are at the receiving end when it comes to movement of goods and services. Zenith Carex has all the potentials in handling third-party logistics, clearing and freight forwarding, all these services, warehousing and distribution. These are part of the services we render.
Okay. All right. Thank you so much.
This program will avail us such an opportunity to key into the investment that is coming to the country.
Okay. Thank you so much, Dr. Adelana Olamilekon, CEO Zenith Carex. Obviously, we'll still be tracking, what's going on there. We have Juliana on the ground there, and she'll be also giving us details of happenings at that business forum. All right, now let's head on to other markets now. Let's see what's happening in the crypto space. We know the crypto market had a great weekend, I must say, with Bitcoin reaching, breaking some serious resistance in the market, talking about price action. And we see the sentiment in the market today, 50 points, neutral, better than fear and extreme fear that's been the norm, in this market. So it shows that investors are getting more comfortable in this market at this point. Let's look at the market cap. Broken that $1 trillion mark. Last time we were here was sometime in 2022. So finally, after breaking below this, touching that about 700 billion point, we're back above 1 trillion, talking about the market cap for the total crypto space. And we see volume traded this morning up 14.05%. Bitcoin dominance sitting at 41.96%. Let's look at the price of Bitcoin this morning, $22,741. A marginal gain this morning, but bigger gains with what we saw over the weekend. Didn't expect that resistance of 21,450, 21,500 to be broken so easily over the weekend, and they happened did touch 23,000 at some point. Volume traded $23 billion. And we see price of Ethereum there. That's also having a minor pullback this morning, 0.15%, $1,634. Volume traded $7.02 billion. Let's bring in Gilbert, your partner now, financial market analyst. Bring us up to speed. Hello, Gilbert.
Yes, good morning, Mr. Laddie.
Good morning, Gilbert. So quite an incredible turn of events, over the weekend. There were indications that, Bitcoin would not be able to break that 21,400 resistance at 21,005, but it did break beyond that and 22,000. And I'm wondering, what is the catalyst here? What is driving this market?
Oh, it's interesting how Bitcoin is ignoring the market chaos. So many companies are filing for bankruptcy. We even had Gemini and Genesis took their drama to the public. FTX itself is fully bankrupt. But despite this, market participants remain bullish, and Bitcoin continues to produce block after block, regardless of market direction. But one major driver I will really look at is the macro is actually getting better. Over the past 6 months before now, the Feds have had very aggressive rate hike, and they kept reiterating their commitment to continue to increase rate until inflation is put under a certain level of control. But recently, you could see that they stepped down from 75. We got 50. Presently, we now have 45. And there are also signs that we may see lower interest rate hike below 45. So the macro is becoming more friendly than it has ever been before. And risks on asset like this begin to have a little bit of fresh air whenever we see interest rate hike becoming friendly.
And talking about risk on assets, Gilbert, I did remember one time, Bitcoin was being touted as that inflation hedge, and obviously 2022 was the year of inflation for most for global economies, but we did not see Bitcoin shine as an inflation hedge, but it acted like the equities market globally. Why is it not acting as a hedge against inflation?
Okay, there are different ways to skin a cat. First of all, if you really zoom and look at the long term, you will agree with me that on the long term, Bitcoin could be an inflation hedge. But once you are approaching it with the short term, we will really have a problem with that. The second reasons why we could really see Bitcoin not performing on the short term as an inflation hedge is because we are dealing with the same crowd of investors. Let's take a look at the fact that you agree with me that the S&P 500 and NASDAQ is heavily correlated to the cryptocurrency market. And then there was a narrative of crypto being a non-correlative asset. But what is happening is that lovers of tech stock, which means if you love Facebook, if you love what Amazon is doing, if you love what Microsoft is doing, and you look at the blockchain industry and the kind of technological innovation these people are bringing in, you will also have love and flair for the kind of technological advancement that is coming from the cryptocurrency market. So we are dealing with the same crowd of investors. So you know how these people behave during risks on environment, they sell. So it's the same crowd, actually.
So I guess Bitcoin can't be that hedge because of the investor mentality. All right, thank you so much, Gilbert. I guess this is still an argument that's still gonna, go on, regardless, looking for that inflation hedge. Well, thank you so much, Gilbert Rapata, financial market analyst. Thank you.
All right, I hope we have more of this discussion someday.
Of course. Thank you so much. All right. So that's it for the markets, and that's a wrap on the program. Don't forget to join us by 1:30 today on Business Incorporated for more updates and developments in the world of business. And we'll be getting the MPC meeting starts today. We'll get that decision tomorrow. We're obviously going to cover that right here from 1:30 p.m. tomorrow. And John McQuarrie will be handling that, the MPC, and we'll get that decision if it's going to be a rate hike or a less aggressive hike. Get all of that details right here on Business Incorporated tomorrow for the live MPC coverage. Thank you so much for watching today. I'm Laddie Williams. Enjoy your day.